First is a element of preparation, as in so much that you have to understand the client's perspective. I mean, rather than keeping your own perceptions aside, you need to understand the perspective of the client. So on today's date, before a meeting, you already have certain public data which you have access to, public information which you can gather around. So then you get an idea of what are the pain points, what are the areas and opportunities which are there when you're talking to the client. The ideal negotiation anywhere in the world, in any scenario, is where both parties come off feeling that they've come better off from the table. And the idea is to create a win-win scenario.
Hello, everyone, and welcome to FaceTime with Leaders by Directors Institute, World Council of Directors. I'm your host, Sunny Pancholi, and today we have with us Mr. Kunal Banerjee, a seasoned financial consultant with deep experience across Treasury, Forex, trade finance, and Fintech. Over the years, Mr. Banerjee has worked with major institutions like ICICI and HSBC, taken on leadership roles in digital lending, and now advises businesses through his own consultancy, Tacks Business Services. His journey cuts across corporate banking, compliance, product development, and client strategy, giving him a 360-degree view of how the financial landscape is shifting. Mr. Banerjee, thank you for being here.
Thank you, Sunny. It's great to be a part of this interview.
So, Mr. Banerjee, we are looking forward to diving into your experience. Let us start our conversation. Can you walk us through your career journey, how it all started and how it has evolved over the years?
Yeah, sure, Sunny. So I initially started my career with ICICI Bank, where I was part of the global markets team, where I was involved with providing solutions regarding to FX and derivative products for clients having foreign exchange, capital account and current account transactions. From there, I moved to HSBC, where during that stint, I learned a lot about relationship management, business development with regard to the FX product, as well as liquidity and cash management. The added advantage during that stint was I got the opportunity to work in both Eastern India and South India. Got a chance to move across both markets, the regional markets, and to understand how across India and different markets, how do you adapt. And additionally, I also got the opportunity to work with both the SME space and the corporate banking space. So that was an 11-year stint, which was great. From there, I joined a startup, which was a peer-to-peer NBFC, where as their business head. And during that stint, I got to work very closely with founders and investors involved with the company, as well as the added responsibility of having to handle the regulator, which was RBI in this case, as well as other external stakeholders. And from there, I decided to come back to my hometown of Calcutta, and I've set up this my consultancy, Tacks Business Services, where predominantly I'm providing clients solutions with regards to debt syndication and banking related matters, be it on the regulatory side or be it regarding FX trade or anything related to the corporate banking side of the business. This gives me the added liberty of traveling and sourcing clients from any part of India and engaging with the management or decision makers of the finance and treasury teams of my various clients.
Great. That's such a clear picture of how things progressed. Really appreciate how you laid that out. So, Mr. Banerjee, Treasury is one of those areas that most people outside the system don't really see. I mean, but you have been right at the center of it, structuring operations end to end. So, from your experience, what's that one part of Treasury that companies often overlook, but later wish they had not? Something that quietly snowballs until it shows up as a major risk or missed opportunity.
Well, over here, the larger corporations do it. They have a proper risk management and active hedging policy in place. But I feel a lot of small and mid-sized corporates do not have a active hedging policy in place. And I'm not talking about a just for the sake of a document having a risk management policy in place, and actually evaluated, analyzed risk management policy in place. Now, just essentially to give you an idea, if you are in the business of say exports and imports, which a lot of Indian corporates are on today's date, you are exposed to the volatility of foreign exchange markets, right? So the dollar rupee prices, euro INR prices, this is a essential part of your business. This is an inherent risk in your business. Now, a lot of corporates will tell you, if we keep it open, for example, in the exports, it keeps going up only, or it keeps moving one direction, and they do not hedge, right? Uh, Over here, now I'll just give you an example. Say you were a corporate in February 2025. You knew you had a $1 million exposure export receivable coming in May 2025. Now imagine your money would have come in at the in the beginning of May. You would have received it at 85 rupees to a dollar. If you would have hedged this in February, you would have received it at 87 rupees a dollar. That means you have lost on every dollar 2 rupees, which is effectively 2% is your loss. Now, over the year, say this is a company which typically the exposure would be 12 million to 20 million dollars, and if you the average loss you're making is around INR 2 to 4 crores, and as and when the amounts magnify, this loss magnifies. So my suggestion, or what I would recommend for most of all these corporates to do, is to have an active hedging policy in place, where you want to keep part of it hedged, you want to keep it part of it unhedged. Let it be a conscious decision that even if we are not keeping it hedged, that means it's a decision we are making not to keep it hedged. And have the policy in such a way that this is the amount which we will keep hedged. This is the amount which we're keeping open for a potential upside, with a trigger level that if the markets reverse, this is what we come out of. Then this is the point we hedge at. So once you do this, your financial management is better, your risk management is better, and if this policy is presented to the board and on a certain periodicity it is reviewed, then you can analyze how your strategy is working, and eventually this will help you make your treasury into a profit center.
Absolutely, and that's exactly the kind of thing that doesn't show up in reports until it's too late. Thank you for breaking it down so clearly for us. All right, so Mr. Banerjee, you have been in the room during some serious trade finance and FX negotiations, those high pressure, high stakes moments where everything's on the line. From where you have stood, what do you think truly sets apart the seasoned negotiators from the rest? Not just tactics, but mindset, the way they carry the conversation when it really matters.
So, Sunny, that's a very good question, and it is something that during my career uh, did learn a lot of, but I probably applied it more when I started my own consultancy. Uh, the few things I feel which are essential and which are very important is, first is a element of preparation, as in so much that you have to understand the client's perspective. I mean, rather than keeping your own perceptions aside, you need to understand the perspective of the client. So on today's date, before a meeting, you already have certain public data which you have access to, or public information which you can gather around. So then you get an idea of what are the pain points, what are the areas and opportunities which are there when you're talking to the client. And then when you reach the meeting, you have this is all assumption based. You have these assumptions, or this data, or this information with you. So as you speak to the client, you have the data with you, plus there are few more points coming. So you keep an open mind for those points, and there were some assumptions you made, you get rid of that, and what is the fact, you marry that, and that is when you understand the client's perspective fully. The objective over here in the meeting is first to understand the client, where he's coming from, what are they wanting, and once you do that, then you will see a lot of opportunities. So essentially, what this means is preparation meets the opportunity. And I've seen the clients appreciate it when you come prepared and you truly try to understand their perspective. by talking to them and understanding what is it that they really want. The second aspect over here would be patience. Keep uh, your eyes on the goal from a long term perspective, not from a short term perspective. So essentially over here, during the negotiations or during the meetings, you have to see what's in it for the client, what's in it for you, on the person across the table, and how do you keep what do you call both parties in a win-win situation. The ideal negotiation anywhere in the world, in any scenario, is where both parties come off feeling that they've come better off from the deal, from the table. And if, the idea is to create a win-win scenario, and you have to be very aware of what your product is and be patient. Focus on this relationship, that this is not the only negotiation, that the thing doesn't end with this negotiation, that look at it from a long-term perspective. This is a long-term relationship. Essentially, be long-term greedy, if I may say so.
Absolutely, Mr. Banerjee. And I can tell that comes from real life experience. Those are the kind of cues people don't learn from textbooks.
Yeah, Sunny. Thanks.
So, Mr. Banerjee, you have been in the room with both regulators and business heads, two very different energies, expectations, and communication styles. From advisory roles to compliance interactions with the RBI, how do you personally stay clear, confident, and composed while switching between those worlds without losing your footing?
That's a very good question, Sunny. See, preparing for these interactions is pretty similar to the previous question that we discussed on, negotiation. So now, first, I'll take the point is, when you're talking to decision makers, the important part is to understand their expectations. What are the results they are expecting? And you have to be very clear on what are the results you can deliver, and to do that, what does it entail? Now, you need to really understand what results are they looking for, and how much of it can you actually deliver. And you have to be very aware of your own limitations and be clear about them. Preparing for these meetings or these interactions is very very similar to the previous question, where you have to get into the client's perspective. So now over here, when I say that, take the decision maker for example as the client. Now the decision, when you're talking to the decision maker, you have to be very clear what are the results they are expecting, and what of those results can you deliver, and what does it entail or require from you to get those results delivered. And you also have to be aware of your own limitations. What is it that you can do and what you cannot do? And at the same time, when you're communicating those limitations, you need to also show a willingness to, that for what you don't have an immediate answer or a solution for, you're prepared to find that solution for them. And I've seen decision makers appreciate this level of clarity and these and self-awareness with the willingness to find a solution. Because at the end of the day, they want that solution, and they don't want a quick fix, they want a proper solution. That's what a typical decision maker would look at. Now I come to RBI. So I majorly had to interact RBI in my P2P stint over there. And initially I was very apprehensive and very cautious while talking to them, because at the end of the day, you don't want to be on the wrong side of the regulator. But as I interacted with them more, interestingly, I saw that they are actually very cooperative, and I also observed that they are very clear as to what they expect from you, and they will guide you on as to what you have to do to meet those expectations. In fact, one major mindset shift I would say here was that while viewing the regulator, is that I started viewing the regulator as helpful rather than someone out there looking to find fault with me or with the company. And my approach changed, that they're here to help, and their presence is important for the overall holistic growth of the market, the sector, which also includes my company. And uh, what I will obviously say is that it was a great experience talking to RBI and the regulators, and I've seen that they're actually very helpful. And at the end of the day, they also have a role to play, and you have to respect that.
So, Mr. Banerjee, you have built such a diverse and layered career: advisory, operations, leadership, and even entrepreneurship. I'm curious now. When you look ahead, Whether it's in terms of growth, contribution, or stepping into boardroom roles, what does that next chapter look like for you? And what's still on the horizon that you are working to?
So that's a very important question, Sunny. At this point, this some key areas that I'm focused on are firstly is to scale my consultancy business. Here, I'm looking to grow my business by meeting clients across geographies and working with them on banking related matters as well as debt syndication. And I've definitely seen the more work I do, the more my exposure. As a result, even my learning increases, and this makes me upgrade my skill set, uh, as well as the network improves. Then the second aspect is, which is also important, is I'm interested in entering board level roles, preferably as an independent director. I believe with my experience in banking and treasury and the other facets of the career which I have done, I can genuinely help companies by sharing what I have learned over the years. At the same time, here also with my exposure increasing, my learning would develop, and I can help make a meaningful impact to the companies I'm involved with. The third aspect is I would also be interested in mentoring. Uh, I'm looking forward to work with younger professionals at the start of their careers, helping them navigate better by sharing my experience, which includes the hits and the misses I have had during my career. This would help them develop faster and grow.
So, Mr. Banerjee, with the kind of leadership roles you have held across banking, fintech, and advisory, I'm sure you have seen firsthand how governance isn't just about compliance anymore. From your perspective, what does strong corporate governance really look like on the ground? And why do you think it has become so critical for businesses today across sectors?
So, Sunny, that's a very good point you made. About corporate governance not just being compliance. So, my take on this, or my view, what is important is, uh, you know, getting past the semantics. At the end of the day, the entire objective of the company is to be more people centric and create a social impact. Now, I have observed in organizations I've worked for that where there is a very open door, employee friendly approach, the performance of the company or those teams change, right? Where over here, what it basically entails is that the junior most employee can reach the senior most employee, share his views. And how this also helps is that from the management, when the vision of the management becomes clearer to the junior employees as well throughout the system, and everyone feels very valued. There is a sense of transparency, and the vision is very clear to everyone, and they are all aligned towards working towards one common goal. This is the first aspect where I would say in people centric. Now, social impact, at the end of the day, the company is selling its products to people, so or to the society at large, and you're a part of society. So you should focus on what is the social impact you're making. Now, you will observe that companies who have a greater social impact, their businesses are actually more profitable and sustainable in the long run. Now, if I may take the example over here of the late Mr. Ratan Tata. Now, the very name of Ratan Tata and the social impact he created as a brand had an impact on his entire group. In fact, in October 2023, when the gentleman passed away, I think most Indians, including me, felt as if someone very close to them had gone, even without ever actually having met the person. So, in companies, essentially, that's what the kind of social impact you create, the kind of social connect you have with the society. Now, there are tools and there are frameworks and all that, but at the end of the day, this is what I feel that the company should focus on.
Rightly said, Mr. Banerjee, and that's such a clear picture of what governance really means in practice, not just check boxes. So before we wrap up, Mr. Banerjee, you recently joined Directors Institute and became part of this growing network of board-ready professionals. I'd love to hear from you. What has that experience been like for you so far?
It has been quite an enriching experience being part of Directors Institute. I quite like the concept of training us professionals to become board ready. Whilst sometimes we may feel that there are a lot of these things which we already know and we've dealt with, right? But however, I see value in this program because it helps you organize what you already know or have learned, and aspects of things which you may have heard of, but you're actually learning it in application, and you need to actually understand how they work in practice. And as you marry this knowledge, it makes you into a better professional. Also, there are the great part of this program is that there are these seasoned professionals who come across, who are board members of some of the largest Indian companies, and they share their real life experience and on these different aspects of functioning in a board, or how these various audit committees work. It does expand my own horizons, and it makes you think and learn better. Added to that, the peer group involved over here again broadens my horizons, and it improves our network as well. Also, there are many knowledge series which regularly come out where we have these seasoned professionals who are working as board members of some of the largest Indian companies. They share their experience and their knowledge, which helps me learn as to how to apply what I'm learning. So that is a very important aspect of this entire program.
To hear that, Mr. Banerjee, and it's been such a solid fit at this stage of your journey. All right, so let me tell you, Mr. Banerjee, it's been an absolute pleasure having you on FaceTime with Leaders. You brought such clarity and depth to every point. Really appreciate you taking the time to share your journey and insights with us.
Sunny, it was really my pleasure to be a part of this, and I'm grateful for this opportunity to share my views. Thank you for personally for the patient and encouraging way in which you've taken me through this entire discussion.
Absolutely. Thank you so much once again, Mr. Banerjee, to join in into FaceTime with Leaders. And to our audience, that wraps up this episode of FaceTime with Leaders by Directors Institute. We will be back soon with more voices, more experiences, and more perspectives from across the boardroom and beyond. Until next time, take care and keep building forward. Thank you so much.